The stock market has been one of the greatest tools for creating generational wealth, creating passive income, or just making money. When it comes to the stock market, there is no discrimination, there is no favoritism, there is no nepotism. It is only you against the market. And when it comes to the market, you don't have to know everything about the market. You can be a complete idiot and succeed in the stock market. Now, if you're looking to learn more about investing, you're looking to invest your first $100 or your first $10 in the stock market, this presentation is for you. Hey, what's up, family? I hope you guys are having a phenomenal start to your day. Now, this presentation here is short, quick, simple. Your first $100 stock market investing. Now, man, there is so much stuff going on when it comes to everybody's promoting and talking about stock market, generational wealth, and people are going in to this stock market stuff all wrong. Number one, the stock market is not a casino. So you're not going to just go in there and just automatically roll the dice and you're going to roll 7s and 11s all the time. All right. So we got to get out of that mindset that the stock market is not a casino, but most people play the stock market as if it is a casino. It's not a get rich scheme. All right. It is not a get rich scheme, no matter how many videos you watch, how many ads pop up saying that they're going to turn $100 into $100,000 in 90 days. Hey, that can't be further from the truth. The stock market is not a get rich scheme. And also, the stock market is not something you can master in 30 days. I've been in the stock market for 16 years and I still haven't mastered the market. There's probably 50 or 70% of things that goes on in the market that I'm still unfamiliar with. And, it doesn't concern me, right? But again, you can't master it. So when these gurus come out here talking about, mastering the market, there is no way to master the market, because if someone could master the market, that person wouldn't be selling you programs. They'd be on an island with $1 billion from all these investment mastery ideas that they will be implementing. Okay, so again, it isn't something you can master in 30 days. Now, when you are investing, or when you start investing, what you want to do is you want to develop a strategy, right? You really want to come up with a strategy. It doesn't have to be anything complex, but a basic strategy on how you want to approach this investing in the stock market. And it starts with a mission statement, like what it is that you are trying to accomplish over the long term. Right? We want to have a long-term mission statement when it comes to our investing. How much money do you want to have when you reach the age of retirement? How much money do you want to create passively from investing in the stock market? How much money are you what percentage are you looking to grow or increase your portfolio annually? Okay, so these are the strategies that you should be thinking about and you should be trying to implement in your overall investing portfolio long term. And also, you got to be committed. So once you develop this mission statement, once you develop this plan and you set these goals and these targets, you want to be committed. All right, you got to be committed. Okay, now, when you want to start a business, right? You start a business, you develop a business plan, and you develop a business model. Well, the same can be said about investing. The same can be said about your future, right? Your goals, because at the end of the day, the only thing that matters when we're 65 is how much money we've accumulated. It's not about title, it's not about status, because in your 50s and your 60s, you want to be in a position where you can live very comfortably. All right. So again, you want to develop an investment model. And this is just an example, okay, of a business or investment model. Now, one form of great investing in the stock market is investing into ETFs. Now, ETFs it's called exchange transfer funds, and it's somewhat similar to a mutual fund. It's a basket of stocks, right? And so each ETF could have 500 or to 3,000 in one fund, and each ETF has a fund manager, and this fund manager takes a look at the stocks that are within its portfolio. They read the 10Ks, they read the earnings reports, they look at the estimated growth, they're looking at estimated revenue, they're looking at net income, they're looking at cash flow, and they're positioning. They take positions where if this company isn't meeting its standards, they throw them out and they put another one in. And so what's better than having a professional take a look at all of these stocks and put the best stocks in its portfolio? All right. Next, you have a expense ratio. And so that's pretty much what they charge. Very, very minimum. Some of them are charging 0.03%. I've seen some 0.04%. And that's basically however much is the total value of the ETF. They just charge a minimum fee for that, and they take that out of the fund. All right. And on average, ETFs have a 10% annualized returns. All right. So we all know the rule of 72. So if your interest is growing or you're having 10% annualized returns every 7.2 years, that money doubles. Okay, cool. All right. So if you had $10,000 and you just put $10,000 in an account and it grows 10% every 7.2 years, that will double. Okay. All right. Next is dividend stocks. And dividend stocks is a great way to create passive income, right? So every quarter they have an earnings report. They're telling you how much they're going to pay out. And so based on per share, they may pay out, for example, Verizon, they may pay out 40 cents a share or 50 cents a share. So for every share that you have, they're going to give you 50 cents. And they're going to mail that to you in a check, or you can have it reinvested into the company. All right. So this is a great way to receive quarterly payments from your stock investments. And there's an opportunity where you can receive dividend checks every month, because there are 7,000 companies and thousands of them give out dividends, and they all report on different times, right? So you can have one report January, they pay out dividends in January. You have another one that's reporting in February, they pay out dividends in February. So you can actually position yourself where you can get a dividend per month. But most companies, they pay out their dividends on a quarterly basis, and the average is a good 3 to 6%, which isn't bad. So again, nice way to create passive income. And one of the type of funds that really pay out the most is REITs, real estate investment trust, and they have to pay out, I think, like 95% of their profit in dividends. And so you'll see these REITs paying anywhere from 8 to 12% yield. Great way to create some passive income. So you have ETFs, you have your money in a basket of stocks, you have some dividends, and they're creating passive income. And last but not least, growth stocks. Okay. Now, growth stocks, they do not pay dividends. Okay. They take all their profit, and what they do is they reinvest their money back into the business. And these growth stocks, a lot of times they have higher growth, they have faster growth. But again, there is some higher volatility there. But for the most part, when you take example of like an Apple or an Amazon, we've seen explosive growth from Amazon because they're not paying out dividends. What they're continuously doing is reinvesting that money, their profits, back into the business to help grow the business exponentially. All right. So there we have it. ETFs, dividend stocks, growth stocks. Now let's take just an investment outlook. And so if you have $100 and you're getting on average 12% annualized returns, and so if we have ETFs, we have some dividend paying stocks, we have some growth stocks. We take those three, so we have that $100 divided amongst those three, and they're giving us a 12% annualized return. Just investing $100 a month starting from zero in 5 years, that'll be $7,799. 10 years, $21,369. In 20 years, $87,427. In 30 years, that'd be $292,599. But this is the kicker. Once you start investing, you're looking at that $100 right now, and you're going to love seeing your money grow. You're going to love the fact that you're investing in your future. You're going to love the fact that you're creating wealth for yourself, and hopefully something that you could pass on to further generations. And so you're going to increase that $100 to $200. You're going to increase it from $200 to $300. You're going to start increasing it from $300 to $500. Then you're going to end up seeing yourself putting away $1,000 a month for your future. You're going to do that once you start investing, once you start getting committed about your long-term success. All right. Again, that's what success is. You're going to get started, right, with $100, and we're going to increase it once we no longer feel the sting of investing $100 in the stock market. We're going to double that to $200, and then to $400. And we're just going to keep moving right along. Okay. Now, one example of an ETF is the VOO, right? And so the VOO is comprised of the S&P 500 stocks, and the S&P 500 is the top publicly traded stocks in the stock market. And you can buy or invest in the VOO, right? You can invest in them weekly, monthly, whenever you get an opportunity to, but they have a 10% 10-year return of 12.92% over a 10-year period. So if you would have invested in them 10 years ago, you would have been averaging 12.92% annual returns. You just can't beat that. An example of a dividend stock, which is Altria. And so as of right now, their current dividend yield is 7%. Again, you just can't beat it. You can't beat it. Good way to create passive income for yourself. And they're paying out these dividends on a quarterly basis. Growth stock, right? Now, here's an example of a growth stock. A growth stock is Microsoft, right? Let's take a look at it. Microsoft is up over 797% this past decade. Think about it. You would have put $100 in Microsoft a decade ago, and you would have been committed to putting $100 per month in Microsoft over the past decade. How much money would you have accumulated? And that's it. An overview of getting started in the stock market. It's not a casino, it's not a get-rich scheme, and it's not something you can master. ETFs, great basket of stocks. Hey, the wealthiest of the wealthiest, they own ETFs and index funds. All right. Dividend stocks, a great way to create passive income. And growth stocks, a great way to add some explosive growth to your overall portfolio. Now, family, that's all I have for you guys today. Now, if you enjoyed the video, hey, please hit me a like, subscribe, and keep coming back for more wealth building information. Peace.